Welcome to the Driven to Succeed Real Estate Podcast. I'm your host, Brandon Olson, and today I have a special guest, Danica Shukar.
Hi.
Hi, Danica.
Hey, Brandon. How's it going?
It's going great. I'm glad you are here today. We're going to talk a little bit about the home buying process, and what is unique about this is you've worked with me for, what, a little over a year and a half now? Almost, yeah.
Yeah,
like
creeping
over a
up
year
on
and a
2.
half.
Yeah,
right.
definitely.
And you've been around me quite a bit, and
I have.
we're building a technology.
It's been a pleasure, by the way.
Oh, well, thank you. And we're building a technology specific to the mortgage industry, and we've thrown all this stuff around. You've heard me talk to clients. You've heard me stressing about certain things.
I have definitely heard you stressing about a thing
right.
or two, yeah.
But let's just ask one question. You're not a homeowner right now, and you have never been through the process.
Never.
So where do you start, Danica?
I genuinely have no idea. I'm hoping you're going to teach me.
Well, and that's part of why we wanted to discuss this, because that is where a lot of people are, right?
Absolutely.
They just don't know where to start in the process, right?
For sure, and you'd think after tagging along with you for the last year and a half, I would have some idea, but I do not.
Well, it goes back to, it's the same thing as like people are going to buy a car, right? What do? They typically will go to the dealership, and the dealership will show them a car if they want it, they want to buy it, and they're like, well, I don't have cash, I need to finance, I have to go to my bank. And they're like, well, don't worry about that, we have our bankers right here, and we can do the loan for you. So it's a similar situation where many, many people do, and this is why I wanted to discuss this, is that they'll go to the real estate, they'll go to Zillow, they'll go to Realtor.com, or they'll see a house on Facebook even, right?
Sure.
And they will reach out to the seller or the listing agent, and the listing agent will say, oh, come on in, we got an open house or whatever, or they will be in touch with a realtor. So they always start on that side, and it's a natural thing to do. It happens all the time.
I don't know if I would do that. Well, I mean, I know you, so I'd probably ask you first, can I afford this house?
Right. But if you don't have the luxury of having a in-house lender, right?
To having a lender on speed dial?
Right, exactly. So, I mean, you want to go get your financing done right. So I love it when, it's probably like 25% of people will come to a lender first. If maybe that high even. Sometimes it's most of our resources really are coming from referral partners, which are the real estate agents.
Okay.
But yes, you want to, if you speak with an agent first, they'll probably refer you to 2 or 3 lenders and so forth. And then that's where you start the process, right? So by coming to a lender first, we do have resources too where we can then put you with real estate agents as well. So it goes both ways. We'd like to refer out. And then personally, if you come to me, I can refer you out. It really goes a long ways with my real estate partners, because sometimes it's just a one-way direction.
Oh, sure.
But the real point of this conversation today is to literally start with, like, what do I do, first thing. So what I like to do as a lender, I like to pre-qualify you. Like, Danica, what do you do for work, right? And how much do you make? What do you have for liabilities? Do you have a car payment? Do you have credit cards? You have student loans? Any other additional monthly payments that are not like insurance and cell phones and other non-obligated credit reporting items. Mm-hmm. And so I get an idea where you are going to be financially, what kind of loan programs we can ask, and I can start discussing then the next steps.
For sure.
So one of the first next steps would be, so you talk to a lender, get pre-qualified, and that's just a verbal. So you don't know the difference between pre-qualified and pre-approved?
I know I should.
Well, pre-approved is where you actually do an application.
Okay.
Credit's been pulled, documents have been pulled. You've sent me all your pay stubs, your bank statements, and all the good stuff, so I can accurately get you approved.
I'm way more familiar with pre-qualified because of LoanNet.
Correct. Yes, because we built a very specific tool to pre-qualify people with.
Yes, super simple.
Yes. So it is actually a super simple process, but that's the first step. The second step is actually doing the application and submitting documentation, and then we can, once you're pre-approved, then we can actually send you out shopping, right? So now you're out shopping, and you're looking at homes, and let's just say I pre-approved you for $400,000 for a new home purchase, and we talked about some payments, and you're like, okay, I found a home, it's $375, what are my payments, right? So that's what I'm going to go into more in depth on what is the payment specifically on that home, because just because I pre-approve you for up to 400 doesn't mean it's always 400. There could be differences in actual, maybe it's got an association, maybe the taxes are higher, and so forth. So then we start looking at the payments and the cash needed to close. Okay. So that's where I wanted to get into when I talk about cash needed to close, because this always comes up. So do you have any idea what cash needed to close is?
Is that your down payment?
Yes.
I've always heard that you should have 10% for a down payment. Is that right?
So 10% is a very good starting point, but the myth is 20% down.
Okay.
You have to have 20% down to buy a home.
Okay.
That's a myth.
Sorry, maybe
right?
I misspoke and
Nope,
it's 20.
you did not. It's 10%, but we can actually do loans at 3.5% down, 3% down. So 3.5 would be like an FHA loan. 3% would be conventional, like a home ready, home possible loan. So there's income limits and so forth. And then there's 5% typically for a conventional. And those are the two number one loan products.
Okay.
So there are other loan products if you're going to live a little more rural. There's USDA loans that are 0 down.
Oh.
And then there's VA loans, veteran loans, that are also 0 down. Okay. Well, going back to the cash to close is going to be a combination of your down payment and closing costs.
Okay.
Right? So breaking down the closing costs is where we really get, people can understand 3% down on $300,000 is $9,000.
Yes, easy to calculate.
Easy to calculate. Or 5% down on $400,000 is $20,000, right? But now we have closing costs, and we got to have the closing costs. So closing costs are kind of a range. A lot of times people just figure right around 3%, maybe 3.5%, depending on certain scenarios. But closing costs is going to be what it costs to get the loan with the lender.
Okay.
So there's origination, processing, underwriting, and maybe some other smaller fees, credit reporting fees, and so forth, appraisal fees, and then you have your title fees. So a title company they have their fees to do all the title work and processing and so forth. And then you have your escrows. So you have taxes, all the state fees. So
Keep going.
naturally, what question do you have?
Is 3 to 3.5% fair estimate, or can it vary hugely from that?
Great question, right? So we can do, essentially there can be lender credits where so on a rate system, we could charge a higher interest rate and bring down those actual costs, remove origination, cover some of the processing and underwriting. So like on VA loans, it used to be very popular where it would be like a zero, because VA loan is 0 out of pocket, and then let's just say a rate was like 5% for them paying their own closing costs, but we could go up to say 5.75 and get 75 that 0.75 makes up the difference in the closing costs. So to say that equals out to be, let's say, $7,000.
So just to make it a little more predictable.
So then they could come into buying that house with no money out of pocket.
Got it.
So that was one that you could do. There's other ones that we do. It's not common to do it right now because interest rates are a lot higher today than they have been historically in the last 20 years. Specifically in the last 18 months.
Yeah.
We've doubled. But there are ways that a lender has the ability to reduce those closing costs and cover some of those origination and processing and underwriting.
Okay.
So that's where, when you are speaking with a lender, is understanding that whole picture. So me, typically, when I'm going to pre-approve you, we're going to discuss all this at the beginning, right? And then I'll ask, how much cash do you have available for closing? Do you have gift funds? Do you have, 401ks? All these different things. So we get this big picture so we know how we can structure the loan properly.
Sure.
Because some cases it's my first home, my parents are going to give me $15,000.
Generous parents.
Yes, right, right.
I'm gonna make my parents listen to this.
Right. And we could, so now we got 15,000 to work with. Oh, we're gonna put $5,000 ourselves, so now we got 20 grand. But what if closing costs are 25 grand, right?
Right.
So we're $5,000 short.
Okay.
So we have a couple options. So we could increase that interest rate so we could decrease the cost of the origination, processing, and so forth. So cover some of that. Maybe there's some down payment assistance programs that you qualify for. And right now there's more and more that kind of jump into the ring, but a lot of times there's only so much to go around. But being in Minnesota, we have one of the biggest ones. It's called Minnesota Housing. So depending on where your income is and how many people in the household, you could potentially get up to like $16,500 of down payment assistance. And if let's just say your income is over that, they have another option for you, and it's like $18,000. It's a monthly payment loan. So you do have to pay that second loan on top of the first. But let's just say you qualify, you're under the income limits, you get $16,500 of zero interest deferred second loan, which means you don't make any payments on it, and it gets paid off when you sell the property or when you refinance, or let's say you take it 30 years to term. At the end of the 30 years, then you have to be responsible for that $16,500 payment.
Okay.
Question, how many loans go 30 years? What percentage do you think?
Ooh, I have no idea.
It's
Are you gonna
like
tell me?
less than 1%.
Really?
Yes, because naturally things happen in life. So your first home, the average first home is like 8 or 9 years before you sell that one and buy it and upgrade. Right? So I think historically it's like people own 3 homes over the course of their life.
Sure.
And you get your first home, then you upgrade, and then maybe you have, you live in that home, and then your last home, you maybe downsize, kids are out of the house and whatever, right?
Ooh,
So
can I make a guess at another one?
Yes.
People refinance.
Correct. Absolutely. And right now we have, being part of New American Funding here, we have what is called a 5-year rate protection. So with rates as high as they are and the expectations for them to come down over the next 2 years, is great. And so people are buying homes now knowing full well that likely in the next 2 years they're going to refinance.
Perfect.
So let's just say you took that second loan out, you got a down payment assistance program. Well, now we go to refinance you 2 years from now, we can just roll that second into your first.
Okay.
And so forth.
Nice.
And so there's a lot of different ways to do this, and going back to why we were starting this discussion is really just kind of understanding the process, right?
Totally.
So to recap, you talk to an agent or you talk to a lender, right? And
one may refer you to the other.
Yes. And then you want to get everything done. So when a lender says you're pre-qualified, and I run into this a lot, specifically with people that are sitting in a very good position. Let's just say they, typical husband and wife, been in their first home, they have super high credit, which would be so let's say 800 credit scores. They have, say $50,000 to $70,000 in cash in the bank that they can use, and they have incomes are salaried and very well off, and they know that they can literally go out and buy another house. So they'll talk to a lender, and they'll say, okay, what kind of fees can we expect, and they kind of well versed, and we'll tell them the process, and you know what happens?
No.
They just expect that, oh, we're all good, right? So then guess what they do is they may have talked to a real estate agent, maybe got set up on a house search already, and they know we've kind of talked prices and whatnot and payments, so they're like, okay, we're looking for a house that's $550,000 and so forth, and they don't do the application yet.
Got it.
Guess what happens?
They're not approved for the amount that they need for the house that they want.
or they find the house that they want on a Friday night. And they contact their agent, and their agent's like, well, we don't even have a pre-approval letter. We can't even go look at it yet.
Right.
So guess what they do? They call the lender. Now, I'm a full-service lender, so I'll probably answer the phone call at 8 o'clock on a Friday night saying, hey, we need to get you into this house. We need this application.
Don't
we
tell
need
people
this,
that,
docs.
Brandon. You gotta like make them beg for it. Don't put that out there.
Right? Well, my thought process is here, and this is that case, but it happens all the time. People talk to a lender, get pre-qualified. Oh, I can buy everything, right? Or anything I want, or I know this is what I can buy, and then they feel like it's a big task to do the application,
Sure.
get all these docs, but they're still actively looking at houses, and then the perfect house comes up. And guess what happens? They can't buy that house because they're not fully approved yet.
Yeah, and then they panic.
Right.
And then you have to step out of a wedding ceremony to crunch some numbers or whatever you do.
Right, and get everybody going. And, I mean, we will do that. It just, I always stress that, the sooner, if you're looking for a house, the sooner you contact the lender or your real estate agent and go through that process, the better you're going to be.
Sure. I mean, it must take a lot of stress off people having everything that needs to be done in case the perfect house comes up.
Yes. I mean, and that's what you want. And every year I have like probably 5 or 6 people that I talk to, and then I don't hear anything. It's crickets until that house pops up. and then they'll always say, it's like, I know you told us to do this already, and I'm sorry. And I'm not, it's like, okay, no worries, but let's go, right? I need this, this, and this. How fast can you get this to me, right? And it works, but it's always about planning, right? And then specifically, too, there's a lot of times that people may not know their whole financial picture, and they tell us only 80% of it or 90% of it, and that last 10% that we don't know, all of a sudden this house comes up, oh, we need this. Okay, well, let's get the application in, let's get it done, and oh, did you know that this was, oh, I forgot about this.
Found out they have collections or something like
that. Something that doesn't meet the needs that we have, right? So now we're trying to jump through hoops. They may miss out on that house or whatever. But it's a learning process, right? So it does happen.
I am amazed at how many fires you're able to put out, though. Like, I know that not every
keep the fires down.
Not every fire is able to be put out, but you figure out ways to put out a lot of fires. So.
Yeah, I mean, there's a lot of times there's ways to make things work. Things come up after the fact. Things that get uncovered maybe in title, or something hits a report. I've had it recently too, where collections, like, something goes to collection, but the collection company, they hold on to that for a period of time, because they know if this person is going to buy a house, or they're going to apply for something, and it flags, right? Then they know that, hey, I'm going to reach out to this person, because a lot of people got smart to negotiating with collection companies,
sure,
and not just paying the full balance. Oh, you owe me $4,000.
Sure.
Okay, here's $4,000. No, here's $2,000, right? But the collection company now gets flagged. Hey, their credit got pulled for a mortgage, because they're getting the leads from the credit bureaus.
Right.
Right, and they're like, I'm gonna call this person. Did you know you have a $4,000 collection? Guess what you owe us? $4,000, right? Otherwise, this is gonna hit your credit report, and you can't buy your house.
Right.
And they got super smart over that in the last few years.
Interesting.
Yes. So, again, that's something that comes up, in the process. And let's just say somebody now under contract on a home, because we did it last minute, pulled the credit, they get a call 2 weeks into their home buying, and like, this is going to hit my credit report like in 2 weeks, and that's going to kill my purchase. But I only had $28,000 for the home to put down. our cash to close is $26,000, and this $4,000 is going to tip the scale, right? Now they're stuck, right? You got to figure it out. You got to do these things. So that's why planning is key.
Definitely.
Right? Knowing the
For
process.
sure.
So number one, talk to your real estate agent. Talk to the lender, preferably the lender first. Do your application due diligence. Make sure everything's in order. And then when we start shopping, make sure you're in contact. And you want a lender, I'm just going to rant a little bit about lenders.
Go for it.
And this is my podcast, so I get to do that.
I'm not going to stop you.
And, there are different avenues to get your money, right? Credit unions, banks, lenders such as myself. So, we're a correspondent mortgage servicing full lender. We hold your loan. Brokers, and all these different ways. What you really want to do if you're shopping for a lender is get to know the lender. Make sure they are going to be there for you. So one of the biggest companies out there starts with an R, ends with mortgage. What are they notorious for? Not knowing everything, because they're an online mortgage company. And, they do have call centers with more inexperienced loan officers that just, okay, we pulled credit through, we got a pay stub, and we're good to go. And then they get under contract, and, we got the processor, underwriters, they found all this other stuff, and guess who gets a call? I do. So let's save this deal, or things like that. And again, get to know your lender. Make sure you're going through the process. Make sure you are submitting everything. Make sure you really know what the cash is needed to close. And I learned early on in this game that, when I say cash to close, that means your total out-of-pocket expenses. So let's say I say your cash to close is $26,000. You put $5,000 down. You got $21,000 cash to close. Includes all of your costs. That's what I like to say, right? And I like to break it down on what kind of fees there are. So let's do real quick. You found a house. You want to make an offer. First thing you do, get an offer accepted. You got to do earnest money. Okay.
Okay.
And let's just say it was 1% of the purchase price. The purchase price is $400,000, so you got to put $4,000 down.
Okay.
Okay, so you got $4,000. So you're writing that check up front. That is going to come off that cash to close.
All right.
Okay, that goes towards that. The next thing, they're going to say, hey, do you want an inspection? And right now, a lot of people are waiving inspections. I don't recommend, but sometimes that's what you got to do to get a house.
Sure.
So inspection is going to be between $400, maybe even $700, depending on how in depth they're going to go on this inspection.
Okay.
So you have that out-of-pocket expense. And then there's the appraisal that the lender will order, that you'll have that out-of-pocket expense. Say it's around $500.
Okay.
Right? So now you had $4,000. Let's just say, for simple terms, it was $500 for the inspection, and it was $500 for the appraisal. Now you have a $5,000 immediately out of pocket. Okay. Cash to close was $26,000. Now you're at $21,000, right?
Yep.
Well, however, take that with a caveat. The inspection, we do not, because it's not something required by the lender, you can't use it. So that was an additional cost out of pocket.
Okay.
So you're actually at $21,500.
Sure.
My bad. Got a little ahead of me, a little ahead of myself on that one. But those are your expected costs out of pocket. If you're buying a condo, you'll probably have to pay a condo questionnaire cost out of pocket, a couple $100.
Okay.
And so forth. But those are the upfront costs, and then the rest goes into the cash to close.
Okay.
Okay. So did I make this as clear as mud?
It's absolutely a little more clear than it was before. I probably should have been paying more attention. I mean, not to this.
Well,
not to this
not
conversation,
today, but like over the
everything leading up to now. Yeah.
Yes. I love this business. One of the things that what I love, and we're going to go and do a short plug on LoanNet, is what are we doing with LoanNet to help with this?
So LoanNet has a whole fillable form built in that aids in the pre-qualifying process.
Yes.
And both the borrower and the lender are able to go through that together, not even in person, but it feels like in person because you
Yes.
can see each other's faces and fill it out together.
Yes, so-
And I think it takes a lot of pressure off that like initial meeting, initial call.
Yes. You know, the whole idea and principle, so with our video chat and our dynamic forums and building that assurance that of the lending side, right? And then all of the products within the product itself is to streamline that process, make it easier for a borrower to understand closing disclosures, understand the pre-qualifying process, and really get to know their lender, you
Yeah,
know,
absolutely.
and streamline it to really keep everybody informed. That's what we're building, right?
Yes.
So, you know, part of this was understanding how fractured the mortgage process is in a lot of sense. Specifically company to company, it's so different. And we're able to provide that to every lender out there.
Right.
So I'm excited for that. But regardless, Danica, I appreciate you coming on today.
It's been fun.
It always is.
Always.
You've interviewed me in the past for our pitch videos
I
and other
have.
things.
Yeah, it's time for you to give it back to me. Maybe next time you can interview me on something I know about. But,
Right?
but this has been fun.
Yes. So anyway, please like and subscribe. Please reach out with any questions. If you are buying a home in the next 6 to 12 months, the sooner you talk to a lender, the better. The better the planning is. There's so many times I just pre-approved somebody today that we started talking to 6 months ago. We had to do some work to get, you know, credit up and so forth, and we got there, and they are super excited. They're going out shopping, like I think tonight. So, but anyway, please reach out if you have any questions. I'd appreciate it. But thank you again. Appreciate coming to the podcast.